first we need to understand the MACD and how it works to properly understand the MACD divergence. The indicator that you're using on your chart will have a MACD line. Along with that MACD line, you will have a signal line that kind of runs parallel to the MACD line, giving it substance. This is used by a simple moving average or an exponential, and you can change the time of that moving average. The tighter you make it will be tighter to the MACD line. The larger number you use, the wider the line will be. Next part of the MACD system is the histogram. As price moves above the center line, it will usually be green. Below the center line will be red. When the MACD line comes underneath the moving average line, this is an indication that the candlestick's price movement should be going lower. At the point the MACD crosses over the simple moving average or exponential is an indication that the probability of the stock market should be going up for the near term. There is no value of measure how far or how long it will go up. You will just have to monitor the next crossover, identifying the momentum change, now bearish, until you get the next shift, reversing the momentum back to the upside, bullish. We're going to keep using pictures off of Google, and it seems very easy. Once the MACD line crosses below, take a bearish trade. Crosses above, take a bullish trade, and keep doing this, making money hand over fist. And at first glance, you would think this would be a money-making machine. But the problem is, you have to identify exactly where the crossover happened. And you can see it was a couple bars and lower than where the peak was. So as price moved down, you still were not in the trade until the crossover alerted you. Of course, there was still plenty of money to be made, but I always like to get in up against resistance, not down here at support. Another crossover. Here's where the outside support was, and here's the signal. A little bit late, not bad if you're looking for a breakout then a bounce. Waiting for the crossover, and it happened about 12 days past where the highest high was. You could have made a lot of money in between here. MACD, break above, missing this huge spike because down here was the support level. Now to be fair, the MACD did catch 50% of this move. More than 50% of this move, and even better, closer to 70% of this move. Likewise with this one. The MACD crossover system is a lagging indicator, meaning it will get you in the trade late. Versus here, price went higher and the MACD went lower, showing that there was going to be a divergence. And so you were able to get in at the resistance level, catching 95% of the move. Another quick sample, we see the crossover, and to be able to fully verify that there was a split in that crossover line would get us into the trade right here, having support be way back here before giving us a signal to get into the trade, not leaving much room for profit. And the way that MACD works is once price breaks above the highest high, which it did right there, but is lower than the MACD lines, which it is right there, that signals a divergence, which would typically look like this because it uses the diagonal line for the indicator, showing this diagonal line going higher and this diagonal line going lower. Same thing reading the histogram. From this high of the histogram, we will mark the high of the candlesticks here. You see the histogram turn red, then pop up with just a little bit of green, which is obviously lower than the last high of the histogram, showing there's a divergence in price and the indicator. And it will show up on our charts like this, going lower and going higher, giving us the perfect area of resistance to get into the trade, capturing 100% of the move, which based on this price showing maybe 8,000 went all the way down to 6,500. You could have made a lot of money in that move. Just reviewing other pictures from Google, we have a crossover line here showing us an entry. We have another crossover line here showing us an entry at support, and another crossover line here somewhere in this big candlestick. But the thing I notice is this histogram started making lower histograms closer to the zero line while price started going lower, giving us, that's right, the perfect divergence entry right here at support instead of somewhere on this candlestick. Remember, this crossover got us in all the way at support, but if you look closely, you have the histogram highs, and the histogram makes lower highs here, while price highs make a higher move there, giving us the perfect entry for a divergence right at the tippy top of this resistance, allowing us to capture the full move down. I want you to have the best trading experience. It makes me laugh when I see all these cherry-picked charts. Buying and selling on these basic crossovers versus getting the extremes. There's your lowest low. Here's the MACD histogram, creating the perfect divergence right at support. Notice the MACD divergence here coming down while price was going higher, getting you out at the highest high instead of where this signal was. was down here at support. And again, notice where the crossover is right on this line here, which means this candlestick right up against resistance. I don't get in against resistance to the long side. They must not know about the hidden divergence that signaled right here off of the MACD line. Would you rather get in here at support or here at resistance on a crossover? Wait, and let's look at the signal of where they say to exit. They say exit on the crossover, which there was also a crossover here, so why didn't they point that one out, which would have been right here, or the one that they indicate to get out on right here. How much profit do you think was realized in that move? Don't forget about time decay versus this divergence here going lower. As you see price going higher, tells you time to get out of the trade, giving you from the absolute bottom of support all the way up to the top of resistance, making huge profits. It's just a different way of looking at charts. That's what I think so great about reviewing all these Google pictures. Another crossover line, get in, crossover, get out. How much money do you think was realized between these 2 points? To me, this sideways would have been a real money sucker. What if you took this down signal, getting you in here, getting you out here? That would be a losing scenario. This one was a little bit better, allowing you to catch a little bit bigger move, but not getting you out at the highs. Did you guys see the divergence off the MACD histogram? Great place to enter into the trade as it falls off lower. At first glance, these two MACD crossover lines gave you great, huge increases. If you got short here, then exited the trade, there wasn't much money to be made. If you got in long here and then exited the trade, you definitely lost. Maybe you were able to get back into the trade lower and take your profits here after losing some of your profits from this big bounce. Instead of making lots of multiple trades getting washed back and forth, just use the MACD divergence, getting you in at the best place of support, before running up into new highs.